Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, we're focusing our attention on Litecoin, ticker LTCUSD, which has been making headlines with some significant price action and key developments. Just a couple of hours ago, news broke that a Litecoin ETF has been delayed, sending LTCUSD down over 3% in what some analysts fear could be the start of a bigger dip if it fails to hold steady. However, it's not all doom and gloom. Recent reports also highlight how Litecoin, alongside Toncoin and Stellar, is still attracting investor attention despite broader altcoin pullbacks. These cryptocurrencies are noted for elevated trading volumes and robust market capitalizations, indicating long-term appeal driven by strong utility, liquidity, and structural fundamentals. As of today, Litecoin's live price is around $108.81, reflecting a decrease over the last 24 hours, but importantly, it's still up over 26% in the last 30 days, suggesting underlying strength despite immediate setbacks. It's crucial to remember that while our charts provide excellent insights, immediate reactions to news, like the recent ETF delay, might be occurring even faster than our daily data updates. Let's now dive into the daily chart for LTCUSD to get a broader perspective on its historical price action. Looking at the entire available data, we can observe distinct phases in Litecoin's journey over the past year. Towards late 2024, specifically in November and December, Litecoin experienced a significant bullish rally, pushing prices from the $70 to $80 range to highs near $140. This strong upward movement indicates a period of high investor confidence and accumulation. However, since early 2025, after peaking around $141 in mid-January, LTCUSD has entered a corrective or consolidation phase, characterized by lower highs and retests of key support levels. The overall trend since Q1 2025 has been a gradual decline, with several attempts to break back above previous resistance zones failing to gain sustainable momentum. Now, let's narrow our focus on the daily chart from July 2024 to the present to identify specific support and resistance levels. We can clearly see a strong foundational support zone emerge around the $60 to $65 mark in July and August 2024, which proved to be a significant accumulation area. Following the late 2024 rally, the $100 to $105 price level initially acted as resistance, but upon breakout, it transformed into a crucial support, holding multiple times through December 2024 and early 2025. The recent price action, particularly the close yesterday around $108.84, shows that LTCUSD has failed to consistently reclaim and hold above the $115 to $120 range, which now acts as immediate overhead resistance. The ETF delay news likely contributed to the sharp drop seen on yesterday's candle, as the market reacted negatively to the lack of immediate regulatory approval. A critical level to watch in the short term is the $100 psychological support, followed by the more robust $90 to $92 support zone established earlier in the year. Transitioning to the 1-hour chart, let's examine the intraday volatility and more immediate price movements leading up to the recent news. Although our data here only extends to July 11th, it still provides valuable insight into shorter-term trends and investor behavior during periods of uncertainty. Around July 9th and 10th, LTCUSD showed some attempts to consolidate and even push higher, hovering around the $90 to $92 mark. However, overhead supply prevented any significant upward breakout, and the price ultimately began to pull back. Notice the increased volume during these price swings, indicating active trading even within a relatively tight range. If this pattern of failing to hold higher levels continued after July 11th, it would align perfectly with the recent ETF delay news, triggering a larger correction from an already weakened short-term position. Now, let's zoom in even further to the 15-minute chart, covering a period from July 24th to July 25th, to observe the microtrends and fine-tune potential trading strategies. In this time frame, price fluctuations are much more apparent, showcasing rapid shifts and quick reversals. We can identify short-term support around $110, which held during multiple tests, and immediate resistance at approximately $115. Notice the sharp drop from $115.51 to $111.43 on July 25th, indicating a sudden influx of selling pressure, likely due to profit-taking or broader market sentiment shifts. Such rapid declines can create short-term oversold conditions, potentially leading to quick bounce opportunities, but they also signal underlying weakness. For day traders, these shorter timeframes are critical for identifying precise entry and exit points, looking for candlestick patterns like hammer or engulfing candles near support or bearish patterns near resistance, combined with volume confirmation. Let's summarize the reasons why one might be bullish on Litecoin despite the recent setback. Fundamentally, Litecoin benefits from strong utility as digital silver, complementary to Bitcoin, with sustained liquidity and multi-billion-dollar market capitalization, underscoring its foundational role in the crypto ecosystem. The ongoing pursuit of spot and basket ETFs by major players like Grayscale, CoinsharesCo, and Canary Funds signals strong institutional interest, and, while delayed, eventual approval could be a massive catalyst. From a technical perspective, the price has historically found strong support around the $90 to $100 level, indicating a floor where buyers step in. Analysts are still predicting significant growth for LTC in 2025, viewing current price corrections as potential entry opportunities for long-term investors. If Litecoin can successfully reestablish itself above $100 and build momentum, a rally towards $120 and potentially previous highs becomes more plausible. Conversely, here are the reasons why a bearish outlook might be warranted for LTCUSD. The immediate impact of the ETF delay is a clear negative signal, dampening investor enthusiasm and leading to short-term price corrections. Litecoin has consistently struggled to break and hold above the significant resistance levels in the $120 to $130 range since early 2025, indicating strong selling pressure at these points. The recent price drop, as shown on our daily chart closing near $108.84, signifies a failure to maintain upward momentum and a break below recent minor supports. If Litecoin cannot hold key support levels, particularly the $100 and $90 zones, it could signal a deeper correction. Increased trading volumes during downtrends, as sometimes observed, can also confirm strong selling conviction. To recap, important price levels to watch for LTCUSD are the immediate support at $108, with stronger support at the psychological $100 mark and the crucial historical floor at $90 to $92. Overhead resistance sits at $115 to $120, followed by the formidable $130 to $140 range. For an unbiased prediction, we assign a 35% likelihood to a bullish reversal. This would be reinforced by positive news on ETF approvals or a broader crypto market rally, especially if LTC holds above $100 and then breaches $120. There's a 45% likelihood for continued consolidation or a slight downtrend. This scenario holds if regulatory uncertainty persists or if Bitcoin and the broader market remain range-bound, keeping LTC between $95 and $115. Finally, we see a 20% likelihood of a significant breakdown. This could happen if LTC fails to hold the $90 support, perhaps triggered by further negative news or a major crypto market sell-off, potentially pushing it back towards the $70 to $80 range. Always keep an eye on official ETF announcements, Bitcoin's price action as a market leader, and significant shifts in trading volume accompanying price movements, as these will be key indicators for future trends. Thank you for watching Explain the Charts, and remember to always do your own research before making any trading decisions.